video, and it's Tuesday the 15th of August, and we'll start with pound dollar this morning. Right, this is the hourly chart. Some weeks ago I mentioned that it looked like we were seeing a wave 4 before wave 5 came in. Time price analysis pinpointed with some excellent expertise the actual, I think Mike entered around 132.60. That email actually came out on the day we launched TPA, and I sent the email out to all of you on that day, a little bit later in the day, and this was quite a fast move. Two counts here. My preferred count is 1, 2, 3, sort of regular 4 here, and then a fifth wave, creating wave 1, then an expanding triangle, creating wave 2, and now wave 3 starting up. An alternative count is 1, 2, 3 to there, 4, and this will be a fifth wave. So if this truncates, then that will support the alternative count, which is Mike's preferred count at the moment, or he may have changed that, I don't know. This thing accelerates downwards, then it would prefer my preferred count, but we'll wait and see how that develops. Let's have a look at the action since this peak came in here, about 130.30. Right, a fairly complex wave here. There's a clear 3 here. 1, 2, 3, 4, 5. There's a 1, 2, 1, 2. So there's a 4. There's a fifth there. Another 4, and a possible fifth down to there. So this is either wave 1 of the next leg down, i.e. wave 3, or it's a complete wave 5 or 1. So fairly critical. This could be an important low. We're now going to bounce back in that case, back above this high here probably. Could see quite a substantial bounce. Or we're going to see a fairly weak bounce, maybe up to around 129.70, and the market's going to then carry on down. So but if you're short here, you want to bet very much going on, see how this develops. I'm currently short, and I'll be monitoring this quite carefully, obviously. We're looking at the DAX. We have the peak here, just below 13,000, ABCB, C wave decline. The DAX is leading the field here. It seems to have seen a complete wave 4 already, or at least could have done. And we've now got a possible 5 wave advance here, suggesting that we've seen wave 1 of new impulsive action. I'm going to get on board that if that's confirmed. Let's have a look at the relationship between this peak. So that's around 12,960 down to 12,3, 660 points. That's about 680, I guess. So yeah, I mean the two are pretty similar in length, with a C wave slightly longer. That all fits in quite well. Let's have a look at the shorter term. Now looking at the 5-minute chart, we saw the low come in here. So we've got a 1, 2, 1, 2, 3, 4, 5. Fourth wave, triangle type affair. Rather a messy fifth wave at the moment. 1, 2, 3, 4, 5 maybe. But there's a bit of overlap there, which is not ideal. But this peak could be some importance. We may now want to see a retracement, maybe down to the fourth wave support, maybe a little bit lower than that. Waves 2 can go quite a lot lower. In fact, it could see even 12,000. So that would, if we see a good entry point there, I'll be advising you accordingly. Looking at the Dow, the decline only started last week, so the DAX may have started weeks before and now finished. The Dow may be just starting up. This is like an ABC. There's a possible 5 there, but I think ABC is a pretty better count. Fibonacci 61.8%, around 230 point bounce. So it takes us to around here somewhere. I don't know what the precise level is. But we seem to have already achieved a 61.8% retracement. So it may be that we should look for shorting opportunities around these levels. Let's have a look at even shorter term here. This is a 15-minute chart, so this was the low, ABC, A, B, 1, 2, 1, 2, 3, 4, 5 maybe. So we could see one more rally to see another peak, but a bit hard to count. I say the Fibonacci levels around, I mean 2200 is 22,000 is a fairly key level. So this bounce back may be important. Let's go down the leg again. Right, the 5-minute chart, the 20,000 level is obviously quite important, so we have that level there. So it's been support, broken, resistance I should say, broken, then support. So the current peaks around 22,045 thereabouts, maybe 50. I can't see there's much of a form to this at the moment terribly. I mean, you probably can count as a 5, I guess. 1, 2, 3, 4, 5. Bounce off there. So this could be the start of the next leg down. It could be quite substantial, so a break back below here could be worth shorting. I want to say a few words about trading psychology today. As you know, I've worked with a number of traders since I started this up in the 80s, and each trader has different form of analysis, different form of approach. Some specialize in 1 or 2 markets, others cover much wider markets. I'm now working with Mike of time price analysis, and what's fascinating really is firstly that he covers a wide range of markets. Now he doesn't trade them all the time. What he does is he cherry picks the trades he wants. Markets will on occasion throw out very low risk opportunities with very high profit potential, and those are the trades he goes for. He tends to ignore stuff which doesn't meet those parameters, or which involve too much risk, or when action is fairly complex. And this obviously gives him a much greater profit potential, because all the time he's just going for very positive, very good trades. But many people just specialise. They specialise in the S&P, or they specialise in the Dow or FTSE, more commonly FTSE in the UK, and they're keen to just get those sort of 50 points, 100 points in FTSE, oblivious really of the risk parameters of each separate trade. Now, if you think about this logically, I mean, if you think about why you're trading, what are you trying to achieve by trading? Surely the way Mike approaches this makes a lot more sense than just specializing in one particular market and trying to squeeze everything you can from this one particular market, regardless of the risks involved in each particular trade. Now, okay, it's in the nature of what Mike does in the actual analysis he uses, that it gives him, so much information, so much more information than any other analysis technique I've come across ever does, that he has set levels, he has clear, very clear indications of the type of trading action expected. It doesn't always work, of course. So far it's worked extremely well in I think almost all the cases we've looked at, but not all the time. You've still got to use risk control, and of course Mike is particularly good at this. He will move his stop to entry as soon as possible. He will not let profits turn to losses. When he's got 80% of his profits, he will often close a trade out because he doesn't want to risk that for another 20%. All solid trading rules which many traders can't actually even adapt, because the information that they're getting in, the analysis they use, doesn't have that kind of breadth or depth to provide that. So what I'm really saying is that, I mean, why you're in the market, what do you actually want from it? And surely this is worth trying out, worth adapting. It's rather ridiculous. Mike has made the point that he doesn't want to adapt to other people's trading techniques, like the Dow, for example. He doesn't want to trade the Dow for various reasons he laid out in the video at the weekend, because he knows what works for him, and he's certainly the best trader I've ever come across. I can't think of anybody else who is comparable, actually. So surely it's nonsense to ask him to do stuff that he knows doesn't work. What's important is to do stuff that does work, to analyze what you want out of markets, and decide why you're in the markets. I mean, it's a fairly fundamental question. With these techniques, you have the possibility of changing your financial situation completely. Now, okay, there is application required, and I know it's quite difficult. One builds up a routine. One wants to do certain things at certain times. But surely the amount of time you actually have free, if your trading was taken up several notches, would compensate entirely for the amount of work you had to put in. And of course, the work gets easier. It's not a question of there is a learning curve. The learning curve takes more time. But once you've actually been through that process, it gets easier, and you know what you're doing, and it's adaptable. Anyway, it's just my sort of point is just think about what you want out of markets, and whether this sort of approach, which is proven I mean, I guess the trade on the pound dollar is a fairly good example. I mean, that's a pretty spectacular entry by anyone's standards. That alone, I mean, okay, it came out the day we launched, so although I did send the signal out, it came in a bit late. But just think about what that could do for your trading, for your life, and is it worth putting in that extra application to make that really work for you? All right, finally Bitcoin, which remains fascinating. Let's call this a 1. This is the big peak we saw back in 2013, kind of an A, B, C, 2. Then this big advance began. So I think I counted as a 1, a 2. Then we had a 1, 2, 1, 2, 3. This is the time we've just seen 4. And this is I'm counting as a 5th wave. Although it's actually the 5th wave since here. And there's another 1, 2 here. So from there and there. Right, so once it's over, we could be due a 4th and a 5th, 4th and a 5th. The things may not be quite as simple as expecting looking at this chart. Let's go come up to here and see if we can analyze this move that's in process. Right, so let's switch on the chart. We've just gone from a 5-year chart to a 1-month chart. So we're down to 1800 or thereabouts a month ago. So we've now almost trebled, not quite actually, 2.5 times I think, in about a month, almost exactly. My counter, this is a 1. There's a small 1, 2 at the bottom here to explain. It looks like an ABC, and it could be an ABC, but or it could be a 1, 2, 3, which is an alternative count, but I'm calling it a 1. We then have this 1, triangular 2, and a 3, which I'm calling the 2 wave. Now, since then, one count that's possible here is that this is actually the 4th wave here. That's a possible count. Then we'll have a 1, 2, 1, 2, 3, 4, 5, 4, 5. It's actually neater to count this as part of wave 3, but it can equally be counted as a 4th wave. And this means this huge acceleration phase we're seeing, which could now in fact be a 5th wave, could be the peak of this move. Now, the only thing I don't like about the count is that the 2nd wave is quite substantial from there to there, and the 4th wave is quite small from there to there, but that's allowable. And we need to gauge the current action, see whether it's actually corrective or impulsive. Let's have a look at that by looking at the daily chart. So the peak we're seeing here around 4.4. This looks like an ABC actually, A, B, C, B, C. So that's suggesting we might be just seeing one more correction. A, B, C, B wave maybe, C wave coming in perhaps. It's become a little bit difficult to trade. I did take a short, but it was actually a balanced short, so I wasn't actually exposed. I'm still holding Bitcoin, and they keep on expanding in price. Haven't looked at Bitcoin Cash recently. I might do that at some point in time. So at the moment it looks corrective, but it looks like it may have further to go. Certainly, rather overdue a sell-off. And I'm not sure that SegWit's actually been implemented yet. I have heard a few rumours that it may not be quite as robust as people might be hoping. So the actual release of SegWit into the open, big, wide world could cause a few hiccups. You'd think not actually, but as I say, I have heard a few rumours. But right now, it looks like a corrective move, so I'm not sure the peak's in. My target actually in module 6 of the Bitcoin Business in a Box course, my target was 4.6 to 5,000 for this peak. So it's got to 4.4. When I said that, I think it was down below 3,000. So it was a fairly good projection so far. It'd be nice to get the target right, as it were. But 4.4 is pretty close. But this looks corrective so far, so I think we're going to go higher in any case. Right, finally, one word warning. I did actually get ripped off with some Stellar the other day. I had it in a wallet. I think it cost me about £200, worth about $1,300. And the wallet was just hacked into, and the Stellar vanished. So that was $1,300 down the drain, which I'm not overly happy about. But But these things are quite. I mean, it's not unexpected. I think is what I would say. I think with more established wallets, like Bitcoin wallet, for example, hardware wallets, Ethereum wallets, Stellar's a fairly minor altcoin, and some of these altcoins are very new, and the actual structure is not really in place for storing them terribly easily. I mean, people keep telling me to get them off the exchanges, so I did, and this is what's happened. So not a happy story, but just something to be aware of. And it's made a small dent in my Bitcoin business, and I guess the lesson has been learned. But it is very hard. It's really quite fiddly, and I mean, although the altcoins have made some magnificent gains, as I started quite small, the gains are quite small also. We'll see. It's just one of those things. Anyway, on that note, I'll call it a day. Hopefully that interesting, useful. Back to the report on Thursday morning. Have a great day. Thanks for listening, and bye for now.